We've got Harshvardhan Dole, Vice President of Institutional Equities at IIFL, joining in right now. Just trying to dissect what could have possibly gone wrong. Thanks very much, Harsh, for joining in. What's your sense and what led to the crack for NHPC, the big 40% drop over the last 2 days?
Well, if one analyzes the fundamentals of the company, those have remained perfectly unchanged over the last week's time. So the fall in the stock price is basically spooked by parameters which are other than fundamentals and which are really hard to explain why the vertical drop in the stock price. So we ourselves are trying to analyze the available data points and trying to derive a meaningful outcome of that. But as of now, I think after the fall in stock price at 20 rupees, I think the stock offers a great value for long-term investors. Particularly, the stock is now well below the book value and offers a dividend yield which is close to about 4.5%. So I think this is a great opportunity to buy for really long-term investors.
All right. But Harsh, what is to say that reasons like the ones that we saw over the last 2 days when the stock plummeted may probably not reoccur, and at that time then investors who've probably looked at an entry point of 20 odd rupees will again be in a stuck trade?
Yeah, I mean the parameters which are other than fundamentals, those are really tough to predict in a market like this. But I think in a longer run, maybe over the period of say one to 1.5 years, what will drive the stock price here on is leave aside these aberrations, but the fundamentals which are driven by the dividend yield and the consistent growth in the earnings, that is far more important, and that should be kept in mind for any long-term investor.
All right. So you're saying at 20 rupees, it's definitely a value buy from a longer-term perspective. What about if you have to give an umbrella call on the power sector as a whole?
Well, recently we have come out with a detailed sector report on power, whereby we have explained that the three key challenges that the sector which has been facing, first being the fuel shortage, second the financial health of the ACBs, and third, most importantly, the unviable PPAs. I think definitive solutions are certainly underway, and one should understand, given the complexity of these issues, the pace of these changes will be kind of calibrated. And if one takes kind of a 2-year view, I think every power stock who's got a reasonable balance sheet, a good execution capability, offers a very good risk-reward opportunity. Just to give a sense, our top pick is Tata Power. The only problem that the company is encountering is the sustained losses in Mundra UNTP because of the unviable tariffs. So if that particular issue is resolved in favor of company, I think the stock can certainly offer a compounded return of more than 20% over the next 3 years from here on.
In order of preference, what would the lineup be within the power sector?
Among the private sector, Tata Power is our top pick, followed by names like maybe JSPL at current price. In the PSUs, Power Grid, that remains our top pick, followed by NHPC and NTPC. But I think if liquidity is not a criteria, I think the smaller cap companies like Satlaj Jalavidyut or even GIPCL, those offer very attractive dividend yields. So if one is not too choosy about the liquidity, I think across the spectrum there are good opportunities to be looked with a 2-year view across the sector.
Got that. Harsh, thanks very much for joining in. Really appreciate you taking out the time.